So, good morning, students. Myself, Dr. Lakshmi Pataya MG, working as an associate professor, Government First Grade College, Koratagere. My title is Financial Accounting. Today, I am discussing the session number 2. In session number 2, under topic Theoretical Framework of Accounting, I am discussing about the functions of accounting, terminologies used in accounting, and users of accounting information. So, first, we know the functions of accounting. The financial accounting functions include systematic tracking, storing, recording, analyzing, summarizing, and reporting of a company's financial transaction. Though the functions of the accounting department, the company can maintain a fiscal history that they can accessible for audits. They can also use it prepare to reports, create budgets, reduce cost, increase profits, avail growth opportunities, and assess future expenditure requirements and make financial predictions also. The basic functions of accounting in a company may include the following. What are the functions? The first one is records financial transaction. Accounting systematically records all financial transactions, helps in maintaining accurate and complete financial records. Second one is provides financial information. It offers clear financial data to stakeholder, owners, investors, managers, etc. Assist in understanding the financial position of the business. Aids in decision making. It helps managers make informed decision about the budgeting, investment, and operations, supports future planning and strategy development, ensures legal compliance. It helps in preparing reports required by law. Example, tax returns, financial statements, complies with the statutory and regulatory requirements. Assist financial reporting. It facilitates the preparation of income statement, balance sheet, and cash flow statement, and also helps evaluate profitability and financial health. Facilitates budgeting and planning. Aids in creating budgets and controlling expenses and ensure better allocation of resources. Attracts investors and creditors. Transparent accounting records build trust, makes it easier to obtain loans and attract investors also. Detects and prevents errors and frauds. Regular audit and reconciliation helps identify discrepancy, strengthens internal control and mechanisms. Helps in taxation, ensure accurate tax calculation and timely payment helps avoid penalties and legal issues, provides a basis for performance evaluation. So it compares current performance with past data, helps to measure the efficiency and profitability of the business. Here are key terminologies are used in accounting. So once again, what are the functions of accounting? Keeping financial records, monitoring the financial transaction, preparing budgets, making financial projections, auditing finances, assessing financial resources, reviewing the performance, complying with the legal requirements, preventing mismanagement, and ensuring vigilance against fraud. Next, who are the users of accounting information? So users of accounting information, accounting information is very useful to a wide range of individuals and organizations who rely on it to make informed decisions. These users are broadly classified into internal and external users. Internal users, these are the individuals within the organization who use accounting data for operational and strategic decision making. Who are those? The first one is management. What purpose management using accounting information to plan, control, and evaluate business operations? Second one is employees and staff. What is the useful to employees and staff? To assess job stability, company's performance, and the potential for business or salary increments. Even owners. To understand the profitability and financial position of the business, definitely owners needs accounting information. Next, external users. These are the individuals or entity outside the organization who use financial information to make various decisions. The first one is investors and shareholders. To evaluate the profitability and potential for future returns. Creditors and lenders, to assess the credit worthiness and ability to repay debts. Even government and regulatory authorities also using accounting information for taxation and compliance with legal regulations. Even customers also using to evaluate the long-term viability of the business, especially for long-term contracts. Another user is supplier. Supplier, what purpose they are using to determine the financial stability of the business before providing credit facilities. Even public and researchers are also using to analyze the economic trends and impacts on society. There are a number of users of accounting information: owners, creditors, investors, employees, government, public, and even management, and also researchers. Next, we are discussing another heading is accounting terminologies. So, what is the first one? Business transaction. Any exchange of money or money's worth as goods and services between two parties is called transactions. Debtor. Debtor, the person who owes money to the business is a debtor. Who is creditor? The person to whom money is owing by the business is a creditor. What is goods? The term goods refers to all types of mobile properties, including shares, stocks, debentures of a company, or all types of articles which business produce for the purpose of sale. Next, assets. Any physical things or rights that have money value is called asset, or even resources owned by a business. Example, cash, buildings, equipments. What is liability? Liability means obligations. What the business has to pay to the outsiders. Example, loans, creditors. Equity or capital. Owner's interest in the business, assets minus liability. Revenue bar income, earnings from business activities, that is sales or services. Even expenses. What is expenses? Cost incurred to earn revenue, that is paying rent, payment of salary, payment of electricity. What is profit? Excess of income or expenditure. What is loss? Excess of expenditure over income. These are the advanced accounting terminologies are used. Accounts receivable. Money owed to the business by customers. What is accounts payable? Money the business owes to suppliers, that is the creditors. What is ledger? Ledger is a book or software that records all financial transactions. What is journal? The first day, first book of entry, where all transactions are recorded chronologically. What is trial balance? A statement that shows all debit and credit balance to check accuracy. What is balance sheet? A financial statement showing assets, liabilities, and equity at a point in time. What is income statement or profit and loss account? It is a statement showing revenues and expenses over a period. So, what is cash flow statement? A report showing cash inflows and outflows over a period of time. Even the other common terms used in accounting: depreciation, reduction in the value of assets over time due to use of or obsolescence. What is accrual? Revenue or expenditure recorded when they are earned or incurred, not when cash is received or paid. What is prepaid expenses? Any payments made in advance for services not yet received. What is inventory? Inventory or stock, goods available for sale or raw materials used for production. What is drawings? Any amount or goods withdrawn by the owner of the business for personal use is called a drawings, or even withdrawal of funds by the owner for personal use. What is voucher? Any written documents to support of a business transaction is called voucher. What is purchases? Purchases refers to acquisition of goods or services either for cash or credit. What is cash purchases? Acquisition of goods and services for immediate payment of cash. What is credit purchases? Acquisition of goods or services for the payment of money is known as credit purchases. What is purchase return? When goods are returned by the purchaser of goods to a supplier of goods on account of damage, defective. What is sales return? When the goods sold are returned back from the customers because of damage, defective. What is tangible assets? Tangible assets are those assets which have physical existence. So these are the various terminologies used in accounting. Next, finally, revision. Accounting serves multiple functions including recording, transaction, classifying and summarizing data and preparing financial reports. These functions helps business to understand their financial position. The terminologies used in accounting such as assets, liabilities, capital, revenue and expenses create a standardized language that ensures clarity and consistency in financial communication across organization and stakeholders. Even the users of accounting information are diverse and include internal users like management and employees, and external users like investors, creditors, government agency, and even the public. Each user relies on accurate accounting data to make informed decisions. In summary, accounting is not just a tool for record keeping, but a comprehensive system that supports planning, control, compliance, and strategic decision making. Understanding its core functions, common terms, and user groups is essential for everyone involved in business or finance. Dear students, these are the reference for upgrading your more informations. You refer the following various books I mentioned here. So thank you very much.